like to thank the Boston Public Library for this partnership and Mass Housing Partnership, or MHP, as we bring to you guys the First Time Homebuyer Success Plan. My name is Denisha McDonald. I am the founder of Our Village Initiative. We are a social impact platform and consulting firm, and we really just want to help people understand their finances and really be able to catapult them and help them get to the next level in terms of wealth building. So for the first two sessions, we talked about the home buying process. Last month, we discussed the budgeting and saving strategies as it relates to home ownership and setting goals and what those numbers might look like when you're thinking about home ownership. Tonight, we're going to talk about credit. And then the last two sessions are going to be on loan products and down payment assistance. I'm going to have a lender come in and partner with us next month to go over all of the down payment assistance programs out there. Like I told you guys last month, there's over $50,000 out there. And depending on your situation, for some people, it might be over $100,000 of down payment assistance out there. So I want to make sure you guys are prepared, you are aware, and you're able to take advantage of these, because once they're gone, because the majority of them are grants. They're not loans, which means once they give those out to people, it's never coming back, right? Whereas a loan, you borrow it, and when you pay it back, it's available for the next person. So I want to make sure you guys are aware. And then the last session is going to be about building your team. So who are the people that needs to be on your real estate team? So a few housekeeping rules. If you guys, I won't see the chat until the end. So if you have any questions, just put your questions in the chat, and then we'll go over them at the end of the presentation. So you guys will be able to understand your credit score, your credit report, know what the credit bureaus are, and particularly when you're thinking about buying a home, what are the things that you guys need to pay attention to and be aware of so that you don't make mistakes, or that you're doing the right thing, even if you're planning to buy a year from now or 2 years from now. Let's start preparing today, okay? So you might be wondering, well, what is credit? Like, what's your credit score? Why is it important, right? Your credit is really a measure of how likely you are to pay something back. The banks don't know your character. They don't know your personality. They've never met you, right? So they need something so that they can judge if you are a good person to lend to financially, right? So your credit, I like to think of it as your report card, and it's like your financial character report card. So good credit means you have a history of borrowing money and paying it back on time. You can borrow money, you don't overextend yourself and max things out, you're financially responsible. Bad credit means you make some mistakes along the way, or you just are irresponsible with funding. So lenders may or may not want to lend to you. And then you have those who have no credits, like they are just off the radar. They just showed up one day and said, I want to buy a house. And for those people, we have to help them build a credit profile so that lenders can learn to trust them. I'm an immigrant, so I am from Trinidad and Tobago, and we don't use credit that much, right? Everything is cash. It's either you have the money or you can't buy whatever you want. There's no credit card, there's no credit or lending. It's becoming more popular now, but for the most part, it's cash, right? A lot of times immigrants who come to the US and other countries, they don't really use a lot of credit. So they don't have a credit history because they're used to paying for everything in cash. So they may have lived here for years, decades, but they pay for everything in cash. And that hurts when you're thinking about buying a home, because now the lenders are like, you say you pay everything on time and you pay for everything in cash. I have no record of this. I have no documentation showing me that over time you've been responsible. So this is why we have to make sure we have a credit profile and we're active in that. There are 3 credit bureaus. We have Equifax, Experian, and TransUnion. They are the overseers. They are your guardians, right? They're looking, everyone is reporting to them so that we can all see how you've been doing financially, right? So anything that you can think of where you borrowed money, it's going to show up, or it should show up on one of 3 of these credit bureaus. Not all creditors have to report to all three of them. Usually it's one or two. Some of them report to all three. So you might see if you pull your credit under Experian, it may be slightly different than when you pull it from TransUnion because everyone may not show up on the credit report. So for me, I believe it's Equifax and TransUnion. One of my Bank of America accounts does not show up on TransUnion, but it does show up on Equifax. Why? I don't know, because I have two Bank of America credit cards and only one shows up on one of the accounts. So just understand that sometimes they don't all report to all three bureaus. And that's why it's important for you to request your credit report from all three of these so you can see what's accurate versus what's not accurate on there, okay? Do you have to pay for this? Well, you are entitled to a free credit report every year from from each of the credit bureaus. So that's 3 credit reports you're entitled to every year for free. You go to annualcreditreport.com and you can request them. They don't give you your score. They only give you the report. So it's literally the history of your borrowing and repaying money. And if you want your score, which we'll talk about later, then you usually have to pay for that. They don't give you the score for free, but they give you the report for free. You get that one from each bureau free throughout the year. So I tell people you can either order all 3 at once or you split it up. So you order one, let's say 1 per quarter, so you can see how you're doing over time. So what's a credit score? What does it look like? So your score ranges from 300 to 850, right? And if you have no history at all, you're just not on there. So it doesn't show up as a 0, there's just nothing. So it says no history or inadequate history. Okay, so a 300 means you've been doing everything bad and everything wrong. Because even if you were new to having credit, you still start off higher than a 300. It's really hard to get a 300 credit score. You have to be missing a lot of payments, in collections, charge-offs, everything that could go wrong went wrong on your report. Okay, the best score is an 850. That's a perfect credit score. Do you need a perfect credit score to buy a house? Absolutely not, right? You don't need to get the 850. Honestly, once you're above a 750, it's bragging rights because you're already getting the best interest rates out there. You're getting all the offers. You've shown them that you're responsible. When people have an 800 credit score, the 850, it's really just to say they have that 800 credit score because there's no extra because you got there, okay? That's just to show you are super responsible. Most people fall within that 640 to 720 range. That fair and good is kind of we're in that spectrum. And if we're not, hopefully by the end of today, you'll learn a little bit more strategies and how to get you closer to that. And those are the numbers that lenders for homes, when you're trying to get a mortgage, that's what they're looking for as well. So what makes up your score? How do I get a 300 versus an 850 credit score? How does that work? Well, just to get on the map, you're starting off at the 300, right? So now you have to work on the other 550 points. And we're going to go over how you gain those 550 points to build your credit. So 35% of your score is payment history. If that's the largest percentage of your score, it lets you know how important lenders value you paying your bills on time, right? They want to know that when you borrow money, you keep your word and you pay people back on time because you're about to borrow hundreds of thousands of dollars from them and they want to make sure they're going to get their money back, right? They don't want you to go into foreclosure. Banks don't want to hunt you down. They want their money because they make money when you pay them. Okay. The second level is 30% of your score is the amount owed. Do you max out all of the money that you borrow? So if a credit card company says you have $1,000 credit card, are you spending $1,000 every month on that credit card? Are you going above that limit every month? Are you always near disaster because you are maxed out on everything? That's what the lenders are looking for. They want to see that you are responsible, that they can give you money and you can use it and pay it off on time, and you don't have to max it out all the time. Because if you're maxing out your credit cards, that probably means you don't have a lot of money left over for saving or an emergency fund. You're kind of living off of your cards or off of your credit, and that concerns them a bit. Next is 15% of your score is the length of history. So the longer you've had credit, the better your chances are, the higher your score will be. I am not ashamed, almost 40. I've had credit or been on the credit report, had a score since I was 18. So my freshman year of college, I've been kind of on the radar. So for that length of history, I have the max score because I've had credit for so long, okay? Next is your new credit, that's 10%, and then credit mix. So what type of credit do you have? So those two account for 10% each of your score. So as you can see, by paying off your debt, right, or paying your debt on time every month and not maxing out your cards or using all of your debt, that's 65% of your score right there. Like you pass if you do those two things. Okay, so what does that look like in numbers for points, right, out of that 850? So that's about 192.5 points that goes towards payment history and about 165 points that goes towards your balance and amount owed. So if you have to pick, okay, what are the things I need to do to build my credit? If you know you're not paying your bills on time, you need to start doing that now, right? If you know that you're maxing out your credit cards, we need to get on a payment plan and a strict budget so that we're paying off that debt and we're not adding more to it. And you'll start to see your score increase drastically compared to if you got a new just got a new credit card, right? Because you see that only counts for about 50 points. Whereas doing these other things, you're getting over 100 points there. So when we're thinking about what we need to do, it's really important to pay attention to those two things, which are the most important that lenders look for. So what do they want to see? Most lenders, especially today in this market, they need to see a minimum of a 640 credit score if you are buying a single family or a condo, and then about a 660 credit score if you're trying to purchase a multifamily. These numbers are based on some of the home buyer programs in Massachusetts today. There are lenders that go lower, right? Because you can buy a house with a 580 credit score, but why would you want to? Your interest rate's going to be ridiculously high, right? So you want to get into this range if you know you're trying to purchase a single family or a condo or a multifamily, because you're going to get down payment assistance. You're going to qualify for a lot of programs once you meet these minimum numbers and these minimum requirements. So it's worth it to put in the extra work to get your score here than to try to purchase with a lower credit score and miss out on all of these opportunities, okay? Lenders look at your middle score, and you're like, well, what's your middle score? Remember before, I said you get there's three credit bureaus, Experian, Equifax, and TransUnion. They're gonna pull all three reports from all three credit bureaus, and those numbers are going to be different because, again, not all creditors report to each one of them. And they're going to take the middle score of those. So if you have a 650, a 680, and a 700, they're going to take the 680 as your credit score. And that's what they're going to base their lending criteria on. You do need to have a minimum of 3 trade lines, right? So that can be student loans, that can be a car payment, so an auto loan, that can be a credit card. That's 3 right there. It could be 3 credit cards. It could be any combination of things. It could be a personal loan, right? But they're looking at 3 things that show up on your credit report that you are paying on time, hopefully every month, to count towards your pre-approval. They want it to be revolving or installment, and we'll go over what those are a little bit later. And they want your debt to be below 30%, and we'll talk about what that means later on as well. If you have any fraud alerts or you've frozen your account, when you are going to get a pre-approval, you need to lift those and remove them, right? Because the lender needs access to your report in order to issue a pre-approval. So if you know that you have everything frozen right now, which some people do just to protect their account so that people can't, they don't have fraud or anyone steal their identity, You have to remove that when you're going to get a pre-approval. And if you forget, then you're going to have to explain why you did that to the bank. Okay. And then you need to explain any addresses, inquiries, or late payments on your report. So anything that's negative, they're going to want detailed explanation. So we tell people before you go speak to a lender, let's take a look at your report, make sure you're good to go so that you don't have issues when you speak with the lenders. Okay. So what happens if you don't have any credit history? So let's say you've paid for everything in cash all your life. Like if you don't have the cash, you just don't buy it. You've been super responsible. To me, you're the ideal person I want to lend to because you're really responsible. But to the bank, they don't know you, right? So they need a credit score. So a lot of people have been complaining over the years, especially those from immigrant populations, because they're at a disadvantage, even though technically they're more responsible than a lot of other people. So banks have said, okay, we need to find non-traditional ways of verifying that you're a responsible person financially. So some of those are, you need to have your rent receipts. So demonstrating that you've paid your rent on time, never late, every month for the past 12 months. And some of them say 24 months, so 2 years, okay? You verify that by having canceled checks. So you keep those little receipts or your bank statements, and they want to see that the money's coming out of your account and going into that landlord's account, whether it's their name or it's a property management company. It needs to go to that same person, that same amount around the same time every month. So if you know rent is due on the 1st, do not pay it on the 1st, all along, and then randomly you go pay on the 15th because you're running late or you pay super early. They need to see it around that same time every month. They're really picky. Do not pay it partially. So if you know your rent is $2,000, don't pay $1,000 now and $1,000 later. Just wait till you have the 2,000 and pay all of that. So they're looking at all of these things to make sure that it can count. If you have one missed payment or a late payment, done. Can't use it anymore. So it has to be perfect for 12 months, okay? You can also use a utility bill in your name. So not a cell phone, because you can live anywhere and your cell phone bill go anywhere, right? It doesn't have to be tied to your actual address. So they want a utility bill in your name. So whether that's light, your heating bill, your gas bill, they want that in your name so that can count as you living there and count as history, because now they're going to pull, again, looking at your bank statements, that you pay Con Edison or whomever, Eversource, every month around the same time, right? We know the amount will probably vary, but the who you're paying to stays the same, and they can track that. They do look at your statements with a fine-tooth comb. They're going over it with a red pen and looking for what's wrong. So they're looking for inconsistencies. So you have to do your part, since you know that, to make sure that you're not complicating your situation, okay? And then other obligations as well. So car insurance, gym memberships, they're looking at those things, but really they want your rent and they want that utility bill in your name. So we talked about before that 15% is your type of credit, right? Your type of debt. Well, what are those? So we have revolving and we have installment. What does that mean? Revolving debt is usually debt that can change from month to month. Those are like a credit card or a line of credit, because it depends on how often or how much you use of it will determine how much you have to pay every month. So the payment amount varies month to month, okay? There's usually just a minimum that you have to pay. As long as you pay that, it's good to go. Then you have installment debt. And your installment debt is where you borrow a lump sum, a large amount, and then they already add the interest and divide that into equal payments over a set amount of time, and you pay that. So whether you're paying today, 6 months from now, 2 years from now, that amount is going to be the same until you've paid off that debt. So some examples of installment accounts are car loans, personal loans, student loans, mortgages, right? Those numbers don't change until you finish paying it off. So whether you owe $1,000 in student loans or $10,000 in student loans, if you started at $10,000 as your initial debt, Whatever that amount was that you had to pay monthly stays the same until you pay it off, unless you refinance out of it. So when we think about building credit or strengthening our profile, showed you how those points are allotted. So you have over 150 points when we're thinking of your payment history and then your amount of debt owed. You know, we're going to be focusing on making sure those things are right. So if you've never looked at your credit report, you've only looked at your credit score, because they are available. A lot of credit card companies today have them. So when you get your statement, it's probably on there where it shows you your score. You need to pay attention to your report, because you want to make sure that there's no identity theft, that someone, took out a card in your name and you have no idea. You don't want that on your report because it's not yours, right? So you want to make sure that you're looking at your report to see what's on there and what needs to be worked on. So we're going to look for our FICO credit score. First of all, there's a difference between FICO and something called Vantage score. FICO credit score is what the banks use, what major lenders use. If you're going to get an auto loan, they look at your FICO credit score as well. Credit Karma, which is something we all use, I use Credit Karma to check my scores and my report. They use your Vantage score, which is a little bit different. So that 680 or that 700 that you see from Credit Karma is not what the lender is going to see when they pull your report. But I use that to help me just monitor what's going on my big credit profile, okay? So you want to make sure that you're pulling your report. Go to annual credit report. We said that that's free, so you can monitor. There are paid options as well. You can go to myfico.com, Identity IQ, My Score IQ, and then again, annual credit report. They will give you your report, and those are all, with the exception of annual credit report, you do have to pay a fee to monitor every month. They come with benefits where some of them have identity theft insurance, so they cover you up to $1 million, I believe. Some of them, they give you tips and tricks on how to increase your score. They let you know if anything shows up on your reports, you get an alert automatically. So they help monitor your report for you. So you can do the paid option. I say once you're serious about purchasing a home, it's a good idea to utilize the paid option, just so you know everything on your report and you're looking at the same calculations that lenders would be looking at, okay? If you need help with your credit because you've made some mistakes in the past, then there are 2 free options for you guys in the city. So you have American Consumer Credit Counseling or consumercredit.com. They're actually located in Newton. And they help you. They have credit counselors available. You can get help with your budget. So you can contact them for help with that. And then you have Boston Bills Credit at bostonbillscredit.org. And they have a lot of organizations that can also help you with improving your credit and making sure that you're maximizing on your score and on your report. And they help you monitor your credit for free. So they can help you pull your credit report and show you your score for free as well. You also get credit counselors. So if you need help with that, they're there to help you. So the first thing was go look at your report, make sure everything is accurate. If you find things that are not accurate on your report, then you need to dispute them, right? So you need to send letters. We do not dispute on the computer. I wouldn't even say a dispute with a phone call. Send letters, things that are documented and written down. It's verified. They can't say they didn't have it. They can't say they don't have a record of you calling, because if you write them a letter, everyone has a copy. Why? Because you're not just going to write a normal letter to them and mail it with a stamp. You're going to go to the post office and send any dispute letters certified mail. So you're going to write your letter, you're going to go to the post office, you can get the little sticker, so that it's certified mail, and you're going to make sure you're requiring them to sign for it so that someone at that building, that office, received your dispute letter, okay? And it's really important to do that, because if you are disputing anything and it's with the creditor, so let's say you're disputing something with American Express, or you were sent to a credit a collections agency, you're disputing something with them, you want that documentation, because if they're denying it, now you can take that paperwork to the credit bureaus and say, hey, I have proof that I sent it to them. See? And they didn't do anything. There's a timeline, a time limit, and laws to protect you. So you have to have it documented. I encourage you to track your disputes. So if you know you sent out a letter today, you need to write that down, that you sent out a letter today. And 30 days from now, they're supposed to, by law, respond to you. So you should get a letter from them stating either they have proof that what you're disputing is accurate, or they have to remove it. If they can't prove it, they have to remove it, okay? You can also send goodwill letters. So let's say you had a few late payments, but otherwise you are very responsible. It happened a couple months ago, but you've been paying on time, and years before you've had a history of paying on time. You can ask your creditor if they're willing to remove those. So because you're trying to buy a home, or because you're trying to make a big purchase and you don't want those blemishes on your report. It's hit or miss if they want to remove those. They don't have to remove the late payments, but I say shoot your shot. Right? Try anyway. So like I said, creditors have 30 days to verify information, or they have to remove it by law. Okay, if they can't prove it, they have to remove it. Do not verify information if they're calling you. So if a debt collector is calling you and they say, hey, are you Denisha McDonald? Do you live at 123 Main Street? Is this your birthday? You don't know anything. You say, I would like anything that you're asking me, please send that to the address that you have on file for me. And I will respond, or Denisha will respond that way. Why? Because sometimes they have the wrong address, or they have the wrong information or inaccurate information on you. And if you're going to dispute anything, if they're never contacting you at the right address, that's cause for them to have to remove that information off of your report. So you never want to confirm anything. You want to give them the burden of proof, right? They have to prove everything because they want something from you, versus you giving, literally confirming and giving them all the information, okay? So always ask for any request in writing. If they're calling you, ask for this conversation. Hey, please put everything in writing and mail it to the address you have on file. Thank you. Do not have conversations with them over the phone. So you've gone through your credit report, you see inaccuracies, you've disputed them. So we're working on those in just time. We're going to wait for those responses because there's nothing else for you to do than to wait after that 30 days. Now we're going to address, do you have a lot of debt, right? So are all of your credit cards maxed out? Then we need to work on paying those down, because if you have high debt, no lender is going to give you a pre-approval to buy a house because you don't have enough money. You can't afford any more debt. Last month, we talked about debt to income ratio. They're looking at what % of your income are you spending towards debt, and can you afford more? Because if you are maxed out on everything, I don't know that you're going to pay me on time, and I want my money, right? And that is when they're looking at what's called your credit utilization. And that is for everything on your credit report, usually the revolving accounts, right? So the ones where you control how much of it you use, they don't want you maxing it out. To optimize your credit score and to optimize a lender being favorable to you, you want your utilization to be below 30%. So if you have a credit card that's $1,000, you probably don't want to go over $300 on that card that's reporting on your credit report. Ideally, you want to be below 10%. So on a $1,000 card, you don't want to show more than $100 being charged to that card at any time, or by the time it reports, so it can maximize your score. Test it out. If you know that your cards are high, pay them down to that 30% and you will see your score jump. You pay it down again and get it to that 10%, it's going to jump again, because you're showing them that you're responsible and you are not carrying or maxing out your credit. Okay, so it's really important to try to keep your utilization between I would say less than 30 or between 10 and 30. The best, if you can, is have it like around 1%, right? They do want to see you using it. So having credit cards and never using them, that's not good either. They do want to see that you can manage your finances, you can use it and pay it off, okay? So a strategy for paying down your debt or your credit cards would be using what's called the snowball method, right? And that's where you line up all your credit cards and all your debt, and you pay off the lowest one first. So if you have a card where the minimum payment is $50, you're going to keep paying that 50. If you have any extra money, throw it to that 50. So it might be $100 one month that you're paying, so you can pay it off. Once that debt is paid off, you're going to go to the next highest debt and add the money from the first one to the second one so you can pay that one off even more aggressively. So using the example here, the retail card was $100 was the minimum payment. They kept paying that and the minimum payments on all of their other cards every month. And then one day they paid off the retail card, as opposed to taking that $100 and now going to buy something else or use it for something else. They said, I'm going to take that 100 and add it to the credit card number 2, which is $120 a month. So now they're going to be putting $220 a month towards credit card number 2. And they're going to keep putting that amount until they pay off that card. And then they're going to take that $220 after that card's paid off and add that to credit card number 1, so that now they're paying $355 every month towards that debt. And that's how you pay off debt. The important thing that a lot of people don't pay attention to, and it gets them in trouble, is once you pay off a card, do not go back and use the card, because you're putting yourself back in debt. You're kind of defeating the whole purpose if you're going to keep putting more debt on there. So as you're paying things off, it's really important not to put more back on the card, okay? So what happens, we talked about before what lenders are looking for if you don't have credit history, right? How they look at your rent, they look at your utility bills. So what happens if you're like, I really just want to build credit. I'm going to buy a house in a year, so I have time to actually get a credit profile because I want to buy a house. Maybe I want to get a real credit card. I want to get a car and finance it. Then you need to build credit. So in order to do that, one thing you can do is get a secured credit card or get a secured loan. Secured credit cards or secured loans are pretty much you borrowing your own money. You go to the bank and say, hey, I would like a secured credit card. I have $1,000 saved. I would like to give you my $1,000. And you put that in a savings account that I cannot touch. And then I would like you to give me a credit card for $1,000. So it's an even exchange. The bank has a security of, if you don't pay off your credit card, they're going to take or keep your money, your $1,000, right? So that's your incentive to pay it off pay it down every month. So you're going to give them the 1,000. They're going to in return give you a credit card. And as you use that card, it's going to be reported to the credit bureaus, and you're going to build credit history. And eventually you'll start getting invitations and offers from other credit card companies so that you can start building your credit. So they'll say, hey, you've been paying on time for, the past 12 months. Would you like a Discover credit card, or would you like a Capital One credit card? So that's how you start building your credit. Pay on time every month. You don't have to pay it off every month. You do have to pay the minimum every month on time, okay? If you're late, you're going to ruin the whole plan. So don't miss payments. I'm a fan of set it and forget it. You set that thing on auto payment, so it happens whether you remember or not. That bill will be paid every month. Your one job is to make sure you have enough money in your bank account to pay it, okay? If you don't want to do the secured card, you can take out a small loan at a credit union and see if you can build a relationship with them that way. You can also ask a trusted friend or family member who has a great credit history, right? They pay everything on time. Their credit score is really high. They're very responsible. You can ask them if you can be an authorized user on their account. And they call it piggybacking. And what that is let's say I have great credit. I have a $10,000 credit card limit, and I don't really use my card. I probably use $500 or $100 or $50 off of it because I don't really use the card, right? But I have great history on that card. Like I've never missed a payment. I don't max it out. Then they can add you to that as an authorized user, but don't give you the card. They keep the card. It's a trick here so you don't mess them up also. And then they would use that card to buy something like gum or gas and pay it off. They use it and they pay it off. By them doing that, they're helping you build your credit score. What's the benefit of that? No one had to pull your credit for you to get that credit card, right? So you're piggybacking off of someone else's good deeds over the years to help you get a credit card and to help you build a credit profile. Next, you want to make sure that you're watching your budget. You don't want to over leverage yourself. If you do have a credit card, don't max it out because you're going to hurt yourself. So making sure you're really good at managing your money is going to go a long way. So what happens to those of us who have student loans and you're not going to get it forgiven because it just didn't work out? And we're still waiting on some of those final decisions on if it will be forgiven or not. But in the meantime, in between time, most lenders, they're going to go off of what's on your credit report, right? So whatever is showing up on your credit report, actually all lenders, is what they're going to report as your payments, okay? If nothing is showing up, because right now we're in forbearance, then they're going to take 0.5 or 1% of your total student loan debt and use that to calculate your monthly debt to issue a pre-approval. If you have a high student loan debt, that's going to tank your debt to income ratio because that number is going to be really, really high, okay? So if you know that you are planning to get a pre-approval before this forbearance period ends with the government, you can either try to start making payments early, so reinstate your payment plan so that you can show up on your credit report that, you know, what that minimum payment is. You can speak to that servicer. So I'm blanking on the names of the servicers right now. We'll go with Navient, I believe. You can ask them for a letter explaining what will be your payment when you are out of forbearance, and give that to the lender so they can use that number to calculate your debt to income ratio. Or you can go on an income-based repayment program. So you're trying to figure out, well, based on my income, if I have a lot of debt, it's always going to be a percentage, or, you know, they're taking into account how much you make. That number may be less. So it helps you when you're getting a pre-approval from a bank. From last session, if you guys remember, when you're looking at your debt to income ratio, lenders are looking at your minimum monthly payment of all of your debt. Okay, so everything that shows up on your credit report, they don't care that you owe $100,000 in student loan debt. They really don't. They do care that your payment is $100 versus $1,000 a month. Okay, because they're looking at how much debt do you have to pay, how many other people, and how much do you have to pay every month? And can you afford my monthly mortgage payment in addition to that? So they don't care about the big number of how much you owe people. They do care about that monthly payment, how much you have to pay, and what percent of your income is that going to take up every month, okay? Because they don't want you to be house poor. They're very conservative, so they need to make sure that those numbers work, okay? So the important thing to remember is that you need to be consistent and you need to be patient. Credit is a lot harder to manage and to improve or grow than it is, I would say, for saving. Why? Because you can get a second job and you can save, or a third job, or you can borrow money or get a gift and reach your savings goal for a down payment, right? In a short amount of time, potentially. But your credit, if it's poor, then you have to put in the work, right? And if we said a dispute takes a minimum of 30 days, right? And you have, let's say, 5 or 6 things that you need to dispute, you're waiting a while, right? And it might be that you have to send dispute letters multiple times. So improving your credit is a lot harder and it takes a lot more time than, let's say, saving for the down payment, because there are many other options to help you overcome that barrier in terms of funding. So what are some ways to boost your score? like I said, I can't stress it enough because it is 35% of your score. Pay your bills on time every time. Okay. So my mom still to this day wants to pay her things by hand. So she logs in on her computer and goes in and transfers the money from one account to the next. I'm like, why are you doing this? If you know you have the money every month, just set it and forget it. Put it on automatic payment and let them do it so you don't forget. Because God forbid life happens and you miss a payment because you had a family emergency or you were traveling and you just forgot. The bank doesn't care, right? That's reported as a missed or a late payment, and that hurts you. So just set it and forget it. Set up automatic payment and move on. Just make sure you have the money in your bank account every month, okay? Obtain a store credit card or get a secured credit card. So a store credit card is if you're going to Macy's, you're going to get a card. If you go to Home Depot, you can get a card. And they are a little bit more lenient than, let's say, Discover or a major credit card. Discover, Visa, MasterCard, those are more difficult to get. The store card, your credit score doesn't impact the interest rate. So their interest rate is 35%, whether you have an 800 credit score or a 300 credit score. It's the same amount, right? So you can try to use that to help you build credit history at a store that you know you would shop at, so you can build some history, but don't go into debt. You can take out a low auto installment loan. So if you know that you're trying to purchase a home within a year or within 2 years, and you're trying to build credit because you have no credit profile, you can, if you know you could pay for a car in cash, maybe not use the cash to pay for it in cash, take out a loan and use that cash to make the monthly payments on it so that it shows up on your report and you can have history, right? Because again, it's all about, can you borrow money from people and pay it back on time? That's literally all the bank cares about, okay? You can borrow someone else's credit profile by piggybacking, and make sure that you're slowing down on opening accounts. If you have poor credit and you keep applying for credit cards, those inquiries are going to hurt you. So stop, okay? Slow down, fix all the other things that are wrong, see if you can piggyback off of someone else's account, if anything, but stop applying for new cards. Because if they see a 500 credit score, every time they pull your credit, that's an inquiry and it's going to drop your score, which is not helping at all, okay? If you want to dispute any inaccurate information on your report, so if your name is spelled incorrectly, dispute that, get that removed. If your address is incorrect, get that removed. If the account information is incorrect, you're disputing all of those things. Anything that's inaccurate on your account, you want those things removed, okay? And a tip there, why is that important? Because sometimes some of the information that's inaccurate on your credit report, so some of the accounts that creditors are calling you for, if it's linked to an inaccurate mailing address, once they remove that, sometimes it falls off as well because it's tied to something that was inaccurate to begin with, okay? If you have good credit and great credit history because you've been paying your debt on time every month, you can actually ask for a credit limit increase, right? So now they have it where it's an automatic button on when you log into your credit card accounts where you can ask for an increase and it just happens. They either say yes or no in that moment. Some banks or some lenders still want you to call them and you can say, hey, I've been a great customer for the past 5 years, past 10 years. I've never missed a payment. I don't max out my card. Do you think I can get a credit increase? And they'll pull your credit. Some don't do it, but some do. And you can increase your credit score. So let's say you have a $1,000 card and then you now increased it to you applied and they said, okay, we trust you, we'll increase that to a $2,000 credit card. How can this help you when we think strategically? If I had a $500 balance on that card, nothing else changed, right? 500 is 50% utilization on a $1,000 card. So my credit score probably not going to be as great because I'm using 50% of my total credit. When they gave me that increase, so I jumped up to $2,000, I still owe $500, right? That didn't change, but now I'm using 25% of my total credit. So by doing nothing else other than saying, hey, I've been a great customer, I've been really good, right? And they said, we will reward that and we will increase your limit. You were able to boost your credit score and give you more buying power. The trick is not to use it, okay? So yes, they let you go up to $2,000 on your limit. Your goal is to keep paying down that $5 and get that $5 down to $200 so that now you're using 10% of your card utilization, and that will boost your credit score. So that's something that a lot of people don't think about in a strategy where it's like that can increase your score easily, but you have to have a good payment history, right? If you've missed payments and you've been late, they're going to tell you no. Okay. So make sure save that as your tool for when you know you have great history and you're just trying to boost and help yourself a little bit. Okay. You can also call lenders and get a better rate. Right now might be a little bit difficult, so keep this in your tool belt. Ask anyway, shoot your shot, you never know. But I call twice a year. Excuse me. I call twice a year to get my interest rate reduced. And say, hey, I've been a great client for the past 10 years. I've never missed a payment. You guys can see my history. Do you think I can get my interest rate reduced? And I've had my interest rate reduced 5 points. So I've gone from 15 to 10. I've got it reduced 2 percentage points. My mom got 0% interest. So for a certain time period. So as opposed to reducing her interest for a longer time, they said, okay, for the next 6 months, we're going to give you 0% interest on your balance. And thank you for being a great customer. For other people, they've said, we're not going to make any changes, but what we will do is refund or give you a credit for your interest payments that you've made for the past 2 months or for the past 6 months. They've given you back money. These are things that are not guaranteed. They will never tell you that you can do it. But when you call and you're polite and you have great history with them, they can give you some of these benefits. I call twice a year and I get it. I have not been lucky enough, like my mom, to get the money back, but I do get my interest rate reduced and I'm okay with that because I don't want it to be too high. So I have credit cards where my interest rate is 9%, have those that are 14%, whereas regular cards are at 20% right now. Okay, so building those relationships and making those phone calls can really help you. Also, pay before the close date and not the due date. You can either call and ask them what those dates are or look on your statement and you will see when the close date is versus the due date. If you pay by the close date, what that does is it pays down your debt. So your utilization looks like less before your creditor reports to the bureau. So before Capital One sends off your report or your utilization to Equifax, TransUnion, you pay it, it's going to show a lower balance if you pay it before the due date, and that helps boost your score as well. You might say, I don't really care. I have a 600 credit score. That's good enough for me. I'm going to apply anyway. Well, here's why we say try to get within the range that you need to get into. Okay. Outside of the city of Boston, the state of Massachusetts, and I tell you this from experience, has some of the best loan products, down payment assistance programs in the country. Okay. In the country. So you want to be within the credit limits of what they need so that you can qualify for those. But if you didn't care about that, or you don't qualify for that because they are income-based as well, then it's still important for you to care about your credit because your interest rate depends on it. The lower your interest rate, the lower your credit score, the higher your interest rate. The higher your credit score, the lower your interest rate. Okay. So they reward your good behavior by your interest rate for your payments. So if you're buying a car, if you have great credit, you're at 4.9%. Your monthly payment is $376. If you have bad credit, that same car, okay, you're at a 500 credit score or a 580 here. You're at 19% interest rate. You're paying $518. So you're paying almost $200 more because your credit is not where it needs to be. That's money that you're giving away to the car company because you did not want to fix your credit. That $200 could be paying off your other debt That $200 could go towards groceries. It could go towards a trip. It could go towards your emergency account. But no, you don't want to fix your credit. So now it's just going to them. It's paying for their yacht and their family vacation. So this is why I say focus on your credit. Looking at a mortgage, great credit, you're at 5.9%. Bad credit, you're at 9.9%. What's the difference? About $700 a month. And this is real. Last month, I showed you guys what the interest rates, why it's been so hard for people to buy today compared to a year prior, because the interest rates have gone up. So by doing nothing else, the cost of borrowing money is really expensive. So you look at the 5.9% to the 9.9%. So that's what, 4% difference. You're paying an extra $700 a month. So it makes sense to spend the time to improve your score to where it needs to be, so you are not giving away money because of your credit score, which is something that you control. You can fix that, okay? It's not out of your control. So what are some things that you need to do, or you should not do when you are thinking of applying for a mortgage? Do not max out your credit cards. Do not take on new loans or increase your spending habit. And do not finance a car. You've no idea how many people, they have a house under agreement, and then they say, I am so excited, I'm about to buy a house, I'm going to go buy a car too. And guess what? Now they can't buy the house because their debt to income ratio just went through the roof because they have a new payment on it. So if you know you're going to buy a house, stop spending money. Live frugally, act like you're broke until you close on that house. Don't buy anything. If you have a house, you're not trying to go buy new furniture. You're not trying to go do the Thanksgiving sale, the Black Friday sale, and buy the washer dryer because when you move into your house, you want a new washer dryer. You buy nothing. You are on a strict budget until you have keys and you have closed on that house, because anything else that you do that affects your credit report is going to hurt you. It will hurt you. So just don't do it. Okay. And obviously don't miss payments and don't have late payments, because those things, again, they hurt. So that's it for me, guys. I would say your homework, if you have not done it already, is to go review your credit report. The easiest way, Credit Karma. I don't advise Credit Karma, but if that's the lowest barrier of entry for you to at least know what's going on, go on Credit Karma so you can see your report and see what's on there, what's accurate, what's not. The next level up is to go to annualcreditreport.com and get your report from them because it's free. If you want to monitor more seriously and more consistently, then you would pay for one of those subscription services so that they send you alerts every month if anything shows up on your report, so that you can monitor it more intentionally. And above all else, pay your bills on time every month. Anything that shows up on your credit report, make sure you're paying them on time, because it hurts you so much more for missing those or being late on those, okay? And it's not guaranteed that you're going to be forgiven or get that, if that goodwill letter is going to work or not. So let's do the things that we can control so that we limit the things that then become out of our control later on. So I'm going to look in the chat box now. If you guys have any questions, just let me know. Thank you so much. Ashley, your hand is raised, so I will call on you in the meantime while I read through these.
Okay, thank you.
Yes, ma'am. Question?
Oh, no, I thought you said to wait until after you're done reading this.
Oh, no, you're good. I was scrolling up while so I can do both. I'm listening.
Okay, I'm sorry, how are you? I just want to say good presentation. You explained this very well.
Thank you.
Well, there was one thing I forgot, but that's just me. My first question was, what is a fair credit score for someone like me? So my credit score is not that great, but what would be a fair credit score for someone to get approved for a loan or a mortgage?
So if you are not trying to take advantage of any of the down payment assistance programs out there,
I don't know much about them anyways.
Okay, so let me tell you, if you are trying to buy in Massachusetts, there are loan products based on your income, and I can send you guys a chart of, so you can tell if you qualify or not. where
please.
you can get up to $50,000 in down payment assistance. So they it's a grant, so it's not money you have to pay back. You have to come up with 1.5% of the purchase price of the home, and then they will give you 5%, up to 5% of the purchase price. So that's money going towards your home. They will also pay for closing cost. That's something that people don't think about when you're buying a home. There's down payment and closing cost. So this program would pay for both of those things for you and give you a lower interest rate. To qualify for that, you need a minimum of a 640 credit score if you're trying to buy a single family or a condo, or a 660 if you're trying to buy a multifamily. So that's why I just tell people, aim for a 640, really aim for a 680 so that you're getting everything, whether you change your mind or not, you're good to go. So I would say your goal, if you're trying to take advantage of that program, is to get between a 640 and a 680 credit score. If you don't want their money and you have a lot of money saved, then you can get a loan with a 600 credit score.
Okay, the next one was, you mentioned about making sure the rent is paid on time, but what happens if someone like myself is living in a residential building, but the leasing management, and I took notice that not only are they taking money and are also overcharging me, but they haven't been paying the rent on time, so I had to start writing them checks because I would check the bank and the money wasn't coming out on time. It wasn't coming out on time for my rent to be even paid on time. So I had to start doing money orders. How are
Yep, so
when,
that would be it. Yep, so exactly. So the money order, because the money comes out of your bank account immediately. So when they choose to cash it, the bank doesn't see that. The bank's you need to keep your receipt from your money order,
mhm,
a copy of it so it shows that it's for rent. They're gonna look at that and then compare that to your bank statement and check the date. And then that's gonna, as long as you do that every month, they're gonna count that. So now you've taken it out of the control of the property management company and you're taking control. So you're making sure I am documenting that I am paying on time every month.
correct,
Whether they
correct,
deposit it a month from now or 2 months from now is not my concern because the money is out of my account. I'm not going to get overdraft fees. The bank's going to see that I've been paying on time. Like, you're building your history. So you have to worry about you. They worry about them. If they lose that, that's on them because you have proof that you gave it to them.
right.
So that's what you need to do.
Right, correct. And the last one is if I have a low credit score, like how you mentioned about secure cards, but I've been my concern is that I have someone that's supposed to be helping me speak to these creditors, but a lot of them went to collection agencies. Is it safe to say to pay those collection agencies? Because I already spoken to some of them and I already made an agreement to start paying one of them.
I would reach out to consumercredit.com or bostonbillscredit.com. They
Mm-hmm.
give you get a credit counselor for free. And they can walk you through it. They have dispute letters that they can send. They can call on your behalf to these creditors and negotiate. So sometimes you don't have to pay, let's say you owe $500. If it's already with a collections agency, the bank already got their money, like they've already written you off.
Right.
You can negotiate for that to be less. So it could be, hey, I'll pay $250 if you remove this off of my report. Talking to one of those agencies, so Consumer Credit or Boston Bills Credit, that counselor can help you craft that letter and work with you and that collections agency. So I would say reach out to one of those organizations and have them help you through that.
Okay, thank you so much. And you're gonna send me these recordings out to the emails, right?
Yes.
Thank you kindly. I appreciate your help.
No
Have a great
problem, no
evening.
problem. Have a
Thank
great
you.
evening. Let's see. When do you max out on the length of history? If you close a credit card, even though you used to have it, does that take it out? Yes. Do not, I didn't put that in there. I apologize. Do not close credit. So even if you don't use the card, don't close it. Just don't use it. Or use it to buy gum or a pen or something. But don't close it because you lose all of that history. So if you had that card for 20 years and you're like, well, I haven't used it in the past 3 years, so I closed it. You've lost 20 years of history. So do not close, especially when you're going to get a loan. Don't close anything. Okay? You keep it on there. and you just either don't use it, but I recommend you just buy gum or something really affordable so it stays active that you're using it. Right now, because we're in tough economic times, a lot of lenders, if you're not using it, they're starting to pull people's credit. So they're going to close your account if you're not using it, and that hurts you as well. So I would say just put a minimum charge. And that happened to me. I think I dropped, I think it was like 20 points because I had a Discover credit card that I wasn't using because one, their limit was low, and two, the interest rate was high. So I was like, this will be saved for an emergency. So I'm never going to use it. Well, they took it away from me earlier this year and it dropped my score. So I would say don't close anything. Just use it for tiny purchases so that it stays active. Use it ever so often, not every month, but ever so often, just use it so it stays active so they don't close it on you. What if you had a credit card and it closed, let's say 2 years, always good standing. Once it's closed, it's gone. So you try your best not to have anything close. If that happened to you, and let's say that was your longest credit history, if you could be an authorized user on someone's account who also has a long credit history, that might help you, just so you build back up that history. But just look and see what it does to your score, because if you have enough other trade lines or other accounts where that one closed, it may not affect you as much because that might have been a 20-year card history, but you have one that's 15 years still open. So you'll be okay. So it depends on your situation and what's on your profile. How do they look at student loans right now since payments are currently suspended? Since payments are suspended, if you're going to get a loan from a bank, a pre-approval, they're going to calculate 1% or 0.5% of your total loan, which is bad. You don't want that. So if you are going to get a loan while it's in forbearance, while the government has suspended payments, you need to get a letter from your servicer stating what your payments will be so that the bank can see that letter, that official document from your servicer of what your payment will be when you return. It's also a great time, since payments are suspended, to see if you could qualify for that income-based program to see if that just lowers your payment altogether. I've seen someone last week, her payments, because she owes over $100,000 in student loans, one of her payments was like $1,100 a month. But she did the income-based program and it dropped it to about 2. So it's worth it to have those conversations right now to figure out what options are available. And so if you don't have the 3 trade lines on your report, you have your rent. If you're doing the rent payments on time, you have your utility bills. If you have those with a good track record, so you can still build those with alternative or non-traditional credit options. Lenders don't like to use it, but it is an option that you have and they can use. And if a lender is giving you a headache over it, then go to another lender who does have it, because they exist. Can email be used instead of mail? Yes, but the best and tried and true is the mail. So I would say just set aside the budget for the stamps. I think it's going to 68 cents a stamp. Until then, go buy some stamps because it's 58 cents right now. And just send it off, but you have to get it certified mail. So just go to the post office, invest it, and send those off. If you're making payments right now for student loans, that's great for you because it's decreasing your principal balance, but it doesn't help you for the bank because it still shows up as a 0%, not 0%, $0 on your credit report. Because it's suspended by the government, they need an actual letter just showing what your monthly payment is. All the bank cares about is how much you have to pay every month. So that's why you need that documentation. Our credit utilization goals of 30% and 10% based on balance that carries over each month. What if you pay off all your balances every month? Yes. So it's based on the balance that if you are going to carry every month, you want it to be within those numbers. If you pay it off, ideally, you still want to pay it off before the close date, the statement date, because then it would show as a zero balance before they report to the credit bureau versus whatever balance you were carrying. So not necessary if you pay it off every month, but that's another strategy, because depending on when they take a snapshot of that card and your usage of that card, it could boost your credit score. So, okay, so this person said they came to the US this month. So you would need to, because it's been only a month, I'm pretty sure I would have to speak with lenders to see if anyone would take it before, but you need to have that 12 months of payment history, because you don't have history in the US at all. So they need to have that payment history here so that they can lend to you, or else it's like you have to pay cash. So I would have to research that a little bit more, but usually they do want to see that history for at least 12 months before they would issue a pre-approval. I would say if you have someone that you could purchase with, so you get a co-borrower if you're trying to buy sooner, that, someone who already has the history, that might be an option for you until you have the history yourself. Okay, those are all the questions in the chat. Any other questions? You guys can unmute yourself and ask. No problem. Well, thank you guys for having me. Thank you, Desiree. If you guys have any questions, feel free to reach out. The goal, again, if you take nothing else from today, pay on time every time and don't max out your cards. By doing those two things and nothing else, you will have, doing the math, that's like a 650 credit score. Just by
Thank you.
doing those two things. Pardon?
I said thank you, and you said you would send out a list of the loan programs or something like that.
Yep. So I'll send that to Desiree with the down payment assistance programs.
Thank you so much. Thank you for everything. Thank you.
No problem. No problem. Have a good evening, everyone.